specifically this year, with the new Farm Bill, it made some changes. However, it was relatively tame after everything, all the dust somewhat settled, but there are a couple things that I want to make you aware of. You can choose how much, to what degree you really want to pursue that, and so forth. But how many of you do texting? Just about all of you, and if you don't raise your hand, I know you do, okay? You might be able to go home tonight and impress your kids or your grandkids, but because you know what BFR stands for. Okay? They might have a different explanation for what it stands for, but beginning farmer and rancher. Okay? So there's a provision in the new Farm Bill that is going to allow someone that meets the qualifications of a beginning farmer and rancher to receive some perks, you want to call it that, for a limited amount of time. And really, as it describes, its intent is to assist some of the new or young beginning farmers. And we see that there's all kinds of other programs through the USDA, the FSA offices, etc., whether it's low interest loans and the like. But it can be for those that have been farming for a lengthy period of time, but they may have had some years of active military service, may have been in post-secondary education, and those are years where they may have been actively farming that will not be counted towards their 5 years of farming history. So if they end up with having 5 or less years of active farming, they would qualify for this beginning farmer rancher, and I'll call them discounts, okay? And again, you have this information. So it's in the other handout, 2 on a page, front and back, as you flip through that. But it is available. And there's it covers a variety of people and a variety of different means. And again, there is paperwork. Let's say we had a husband and wife that were farming together. Each of them would need to fill out an application because they want to verify maybe the wife had previous farming history that the husband did not have. And that would actually count against them because their policy is a spousal policy. If we've got a corporation, they're going to want to look at the individuals within that corporation, and that may exclude or take away some of the years of eligibility. But the companies are asking that be turned in by March 15th with their regular crop insurance application. We're saying don't wait that long. Just with anything, let's get through the paperwork. It should be a one-time thing that we need to go through. Well, we want to make sure that it's done accurately and done ahead of time. So if you've got questions, and I've gone through my list of insureds, and at least what I know about their operation, there could be half a dozen to a dozen within the customers that we're working with that would qualify for this. So it's something you want to take a look at. Okay? As I mentioned, if you're under 18 and you are actively farming and you have crop insurance history, they may actually exclude that, or they will exclude that, I should say, or if you had military duty, active duty, or you were in college, they would exclude those years. Okay, what are the benefits? It's laid out here. There's an admin fee that every one of you pay by crop, by county. So if you're in Sibley County to grow corn and beans, you'll see on your premium billing there's a $30 admin fee for corn and $30 for beans. Okay, that's waived for the beginning farmer rancher. The second piece is there's an additional, I guess depending on how you talk about it, Art says it was a cost share when the government's paying part of your premium. Here they're saying it's an additional 10% subsidy. So if I'm at a level of insurance and I'm getting 48% subsidy on the total cost, and I'm a beginning farmer rancher, I'm going to get a 58% subsidy, an additional 10%. And then the bottom piece, a little known, it's not talked about a whole lot, but every one of your policies is likely or should have what's called a yield adjustment option. It doesn't cost you anything to have that option on there, but you should have it on there. Okay? What that does for you is in the event of a really poor yield in your database, let's say in 2014, I grew 80 bushel corn. Okay? Instead of 80 bushels coming into your database, they'll actually use a yield or a substitute yield to help soften that poor yield. So it doesn't hit your 10-year APH so hard. that's something, sometimes that's overlooked, it's not on the policy and so forth. But for the beginning farmer and rancher, that plug yield is going to be 80% of the county T yield. For you and anybody else that's got many years of active farming, you get 60%. So those are the three perks for the beginning farmer and rancher. The one thing, and this is another reason we want to go through those applications sooner than later. When I started farming, I might have been able to utilize or been given or granted the history from my parents' operation because I was actively involved with them. There was a form that allowed you to assume their history on your policy as well. Okay? Well, that might be a full 10-year database. They've only been actively farming as a beginning farmer rancher for 2 years. We need to be able to look at that database and say, all these other previous years were as a result of that transfer of history, not because you actually have 10 years of history yourself as this younger farmer. So that's one of those things we want to be able to have a little time to go through. We're going to go through those applications. Second component that you may have read or heard about was there is a yield exclusion. So if we have, as I described earlier, we have a really poor yield. And it's based on how does the county. So Brown County has a yield that's less than 50% of the county's average yield. You have the ability on your policy to say that I'd like to exclude that year. I'd like to exclude my personal yield for that year that the county did so poorly. Okay? Another reason that'll help then soften the blow or eliminate that poor crop in your 10 years of data. Okay? So if you have 10 years of full data already, and 2014 comes in, it's a bomb, okay? When we calculate your coverage next year, okay, it's going to be looking at the 9 years of history, because it will not recognize 14 if you chose to exclude that, okay? But again, it's based on how the county does, not you individually, whether or not we get to exercise that exclusion, okay? Then we have to make that decision by March 15th, which is, you know, our coverage decision anyway, so. Okay, here's a key thing that don't overlook. And it can be as simple as contacting your FSA. I know everybody's going to be in there at least 1, 2, 3, 4 times between now and potentially June 1st. Okay, you're going to go in, update your base and yields. Okay, you're going to go in and maybe at the same time you make your election for your coverage. So that's one visit. Second visit is going to be when they are going to actually do the enrollment. Okay. Thirdly, you might be in there for your acreage report before June 1st. By June 1st this year, you have to be sure that you have this form right here, the AD 1026. Okay? It just says that you are not in violation of the conservation compliance rules and guidelines. Most of you already have that. Okay? But you got to be sure you do have it in case you've done anything so much as maybe you've done removed some fence rows, which might have been a result of you combining some fields, okay? Maybe you got rid of a little bit of the trees on the backside of the grove and they actually documented that now the field is a ½ acre bigger, okay? Anybody do any tile drainage or any repairs, okay? And maybe when you did that, they updated your 1026, but just, you gotta be sure. So go in and ask them, send them an email. I know somebody just sent an email, got an answer back 2 hours later. Yep, we got your 1026 already on file, it's current. End of story. What we do ask, and as I guess a service to you, if you got that, or you can get you a copy of that, give it to us, and we'll electronically scan it into your electronic insurance folder that we have. We're moving to more and more paperless, and so we've got a great access to great electronic storage. So another thing we can do for you. There's the form, not real complicated. Again, we got to have it done by June, okay? Now, the consequence is if you don't have that, and they come to find that you're not in compliance, beginning with the 2016 crop, you will lose your subsidy entirely on your premium for your crop insurance. So, if you're paying a $25 premium today or this past year, more likely your premium is going to be 50 or 55 or 60. just depending on coverage levels and all those factors. So it's not something to overlook. A question was raised recently. I said, well, I know there's an appeals process, and if you think you want to use that tool, that appeal could go on. Actually, you could continue to play that game until the Farm Bill is done. You could appeal this thing for 5 years and continue to get the subsidized premiums, right? Okay? But if you lose that appeal, they're going to come back and they're going to collect it all, or at least they're going to require it. And they tend to seem to have the means and abilities to get that if you want to play hardball. So just be aware of that. Again, once you got it in place, it's continuous, unless you do some activities that would cause it to fall out of compliance. I'm only going to mention the whole farm revenue. It's a form of coverage. In Minnesota, Lynn already took off, but I do not believe within the entire AgQuest database that there is anyone that's using whole farm revenue. Doesn't mean it couldn't apply, but there is some strength, or should I say, in numbers in what a lot of people are doing. But what it is, it's very similar to a program that used to be called AGR or AGR Lite. And again, it's a little bit like this Farm Bill where you're doing the ARC individual, where they're combining your entire county. Everything you do in the county together. Well, this is the same policy, okay? Premiums are somewhat less, but we really throw it out as a warning. There may be some people out there trying to peddle this just on the fact that, hey, it's cheap, okay? But it's very, very much like an enterprise, you're supersizing your enterprise coverage because you're now lumping everything together, and it's actually quite risky. Okay, a couple more things. Keep in mind, if you're breaking any new native prairie or ground that's coming out of CRP and so forth, there are simple activities here that would be considered new breaking. Okay? Now there are some limits. If you're doing new breaking and it's 5 acres or less in the county for that crop, so if you're breaking and you put 5 more acres of new breaking into corn, and then another 5 acres into beans, and maybe you plant wheat, so you put another 5 acres into wheat, and you had a total of 15 that you actually were breaking out that year, you would be under the level or the requirement that would cause you to have to do anything special, okay? But if you did all 15 of those acres as corn that first year, now they're going to set up those 15 acres as a separate database, because you're not going to be able to carry your full insurance coverage on that, because it's deemed obviously a higher risk piece of ground. We'll keep track of the production. Eventually that will be migrated back into your farming operation. But just some things to be aware of on new breaking. I mean, invariably every year it does happen. We get a little bit here and there, but has not been a real big issue. Okay. This last piece, and I'm going to go to that handout that we talked about earlier. Okay. Remember the one where I said if you want that price discovery sheet, you just got to sign up or just indicate on the sign-in sheet if you want that. So I just want to lay the groundwork. Your crop policy is going to discover your spring price in the month of February. Okay? And you can see on this sheet that we're in January. And you can see the previous months that we have recorded from July all the way through December. And so every day that the Chicago Board of Trade is open and trades, the closing price is recorded. And at the bottom of the sheet, we have broken it out into the yellow numbers are the first half of each month. The blue or light gray is the second half of the month. And then the orange is the entire month. Okay, so that's price discovery. In the month of February, that's what happens. The whole month is determined, and that's the price that establishes your coverage. And that also is the number that will impact what your premium will be. Okay? About 4 years ago, NAU came out with an endorsement that you could add to your policy to potentially give you a better price than February. And that was called multiple price discovery. Okay? Very simply, what multiple price discovery did, okay, it gave you the ability to have extra months besides February. And when they first came out, and I'll just describe it that way because it's very similar to this year's program, is they allowed you, or if you chose the endorsement, you could have December, January, and March. So each of those months, independent of any of the others, would discover its average price. So if December, as you can see on here, December averaged the price for the entire month of $427. So if you had if for 2015 you put this endorsement in place, you'd have 427 as one number. Now we're in January. To date, we've got yesterday's closing market in this sheet, 424. Okay? Well, if the bearish news in the market comes to fruition, we've talked about it at the meetings, maybe January ends up at $4. Okay? And maybe February, then, our discovery month for your policy, comes in at $390. Okay? If you had this endorsement, you also have March. You have this endorsement with NAU, you still have March. You see, what does March do? Now, let's say March rallies back a little bit and gets us back to $4. Okay? Remember, February, $390. And if you had this endorsement, December was $424. I'm sorry, $427. Okay? So that would have been 37 cents that you gained above February. Little caveat here. They've just said the maximum limit we're going to take, or a risk we will take with this endorsement, is 35 cents. So in that example, you'd have captured 35 cents. Basically, you've just created a little bit higher floor price for your policy, okay? So that's the insurance put. Those that I'm working with, you know, we've gone through this a number of years. The insurance put, we've actually now just raised that, okay? In the last 2 years, you can see that information when you flip the sheet over. This is 10 years of data, but I want to point out to you what happened in the last 2 years. Look at corn, the top half of the sheet, but look at 2013, and look at February. What do you get? $5.65. That was our spring price coming into the 2013 year. Those that utilized this endorsement got $6.21. And that was actually more than 50 cents higher than their limit that they had at that time. So it was capped at 50 cents. Those policies picked up that 50 cent, should I say, bonus to their spring price. Now, this is tied into your revenue policy, okay? So if you grow a normal crop or an exceptionally above average crop, your multi-peril isn't going to trigger because you'll still have exceeded your revenue protection, okay? But if we have a little hiccup, and this year was another example, if you look at 2014, what did we have in February? $4.62. Those with the NAU endorsement received the March price was $4.85. They picked up 23 cents on their endorsement. So with these slightly lower yields we had this year, and significantly lower in some cases, and not only that, but the slide in the market, this premium, this endorsement has paid quite handsomely the last couple of years. Now, we all know insurance companies have to operate, they have to make a profit, so is it going to be able to pay, or will they pay it every year? Well, if they pay it every year and they do it for too many years, you won't see them anymore, okay? But the fact remains, it's a game of where do you want to carry your risk and where you don't. So I want to just lay this out, give you a better understanding, because quite truthfully, I'm surprised more and more people I talk to either haven't heard about the endorsement or maybe they haven't been kept up on it, okay? So this is something that ties very well in with your marketing. Now, so I just wanted to lay the groundwork. NAU was the originators of it, came out 4 years ago. In all honesty, they kind of pulled their horns back in a little bit. They paid probably 5 to 6 times out versus what they took in 2014, okay? For every $6 premium, they're paying out $25 to $30 in loss this year. Partially, that was because of our low market price, okay? But also low yields. So it's, again, revenue-based. One of the other two companies that have kind of come to the table and said, hey, we'd like to tweak that a little bit. One is ADM, and that's ADM, the grain company. The other one is Great American, one of the larger underwriting companies in the U.S., okay? They've also come out with something. But what I want to talk about here is just some similarities between all the products. It doesn't matter what you choose, but they bill a premium in the fall, just like your crop insurance, okay? Again, I talked about February, that's the spring price. Obviously, that is the same regardless of whether you do this endorsement or not. That's what your policy, your underlying multi-peril policy is based on, okay? And be it known that if February ends up being the high month, and you have the endorsement that we just talked about that goes December through March, if February is the high, you get to February, because that's still going to be on your policy. Just that this endorsement then will not have any value to you, because February is your best number, and you're going to have that, okay? So it'd be like a put that is expired useless, okay? The other part is, what if we have a much higher fall price than we do in the spring, okay? Which price do we get? We get the fall price. So then the fall trumps everything, and nothing in the spring means anything. Everything is going to be based off of the fall. So that'd be another example where it expires worthless. But in all reality, if we get higher prices in the fall than we get in the spring, most people aren't too disappointed about that. Okay? So we've talked about the NAU. Okay? Great American, I'm going to back up. So of these three, NAU, I described that one as probably being the most passive, or for the person that maybe is the most passive in their marketing. Doesn't mean that's bad or good. In the past, it was the only endorsement you could choose. So it's either you like it or you don't. Okay? But moving forward, now we have some choices. NAU is the most passive. You say, yes, I want the endorsement. Well, then you just sit back and watch it happen. See what happens. Great American came along and said, yeah, we're going to do something similar to that, but we're going to give you a little bit more decision. You could say, I like the endorsement, but now you can choose the months. So that's where this piece, I think, comes in. I know it comes in, is on this, you can see 10 years of history. And the prices on here are the monthly average price. What is the high for that month, looking at that futures market for that year? So in 2014, the numbers listed on here is the December 2014 corn futures. And during the month of March, what did we average? 485. That was the monthly average. Okay? But if you look back and push this away a little bit, take a little bit of a 10,000-foot view of this sheet, you'll see some gray boxes on there. The gray boxes represent the month that had the high for that year. Okay? So when I look at corn, I see a lot more highs occurring in the spring and summer than I do in the winter. We had one in November of 2013. That was a wintertime high, and a February high in 2007. Outside of that, all the other highs have occurred in the summer and even into the harvest time months. Okay? Beans, it's even more significant that all the activity has happened in May onward. Now, some of you are well aware of Ed Ussett from the University of Minnesota. I say take this sheet with a certain amount of, I can say a grain of salt. Ed will say we want to spend a certain amount of time looking in the rear view mirror, but don't get sucked into that 100%, because if we continue to talk about what's happened in the past and all of our decisions are driven off of that, we could be led down a pretty dead-end road. So we still have to look out the windshield and see what's coming at us. And I think this year especially, we've heard what the crop outlook is. We're going to get a report next Monday. We also are knowing what some of the forecasts are for potential carryouts if we assume normal crop. Last night at the meeting, what was the number of old crop beans that are sold? Anybody remember? Yeah, and new crop was like 8. Okay, 8% of the new crop beans have been priced. So there is a certain amount of, yes, it's good to have historical data. All those charts that Peterson puts up all the time are based on what's coming necessarily. That's where all the lines are that he has on there, okay? But everything on there is historical, so it does have some merit. but I think this is important to be aware of. Okay, so this is the one that has tied in and maybe assists the most with those that do like to look at the Great American Tool and say, I'd like to pick and choose some different months. And I have brought up the quoting tool here for Great American. I'm just going to walk through an example, okay, real quickly. And in here, all we're doing is we're choosing our crop or our type of coverage. I've chosen corn, Minnesota, Sibley County. It's corn for grain, non-irrigated. We're assuming we're at 85% multi-peril. Here's one of the caveats that the Great American gives us is you can choose how much maximum movement you'd also like or to have at your disposal. Remember I said the NAU was a 35-cent limit. It's fixed. You can't do anything about that. Great American says, no, we're going to let you make that decision as well. I've just put it on here at 50 cents. And then down here, I've just given it the last couple things. What I have done is I've talked to a lot of people, and some people are concerned about or that we might be at a relative market high right now. And so in choosing months, they've said, I'd like to choose January. I'd like a nearby month, okay? But then May could be a decent month if we have some planting challenges in the country. That could shoot the market up. Or we could have some growing season challenges, so I'd like July. By no means do you have to pick 3 months. July is the furthest out month we can choose, but we can go from January all the way through July. You can choose 1 month. You can choose 2, 3, 4, 5, 6, and so forth. But in this example, I've just chosen those 3 representative months. Okay? So right here, there's my cost. Okay? This is not multi-peril. This is the endorsement. Okay? So a lot of times we're like, ooh, pick your jaw up off the floor. Okay? I think it's important. I won't even ask for a raise of hands, but I know there's a certain amount in the crowd that do work with puts. And maybe you're selling calls to be able to buy the puts and so forth, or you're just doing puts and working your way up, raising that floor. Okay? The insurance put is an important concept to understand. And Art talked about what is the farm bill put if you're doing Art County versus PLC. Okay? We're talking 11 cents here is your cost for this endorsement. Okay? I looked at the money put yesterday for $4.20 corn, and it was about 37 cents. Okay? So if we think puts are a tool that have some merit or value, this certainly is not out of the ballpark as well, as far as cost. It could expire worthless, no doubt about that. But there's an example, okay? We'll go back. I'm just going to grab one more, and maybe you're saying, well, we're already in January. February is pretty darn close. I like February, so I'm only going to be concerned about springtime and summertime months. I'll mention one other thing here. You can see on these months here, you can see I'm just choosing full months, but if you, for instance, say, I'd like a half month, first half or second half, that's also a choice. But I'm going to do May and July. If it lets me. Nope, there we go. $11. So just about cut our premium in half. So this is a second tool that's out there. Now there are some deadlines. Great American is giving us the greatest amount of flexibility. This is an endorsement that you can add all the way out until March 15th. So if you want to see what does February give us first, and then from there go ahead and add some months with this endorsement, you sure can. Okay? There's some nearby deadlines if you're wanting to only do something. You only want to do something with the January and so forth, then we've got a deadline here coming up. If you wanted the full month of January, we'd have to know that by the 20th. Otherwise, it's no longer available. So that's Great American. They certainly are giving us some nice caps or maximum exposure, $1 on corn and 2 on beans. Okay. The third one is ADM. Now, I just said Great American is kind of a blend. Okay. Great American says you get to pick the months, but once you do that, then you just sit back and let it happen, and you see what happens. ADM is the most, should I say, active or aggressive, if it describes how a person is marketing their grain. Maybe you'd like to forward sell, maybe you're using a lot of puts and calls. This may be a tool that then is more to your liking and so forth. But what they're doing, and then go back to that sheet again, this discovery tracker, they're the one that give you half-month increments. So they are monitoring the first half of January, okay? And you'll see that on your sheet. Again, it's in yellow, 424 is our corn. So by the 15th of January, which is the last trading day of that first half interval, you have to decide if you like that number. And if you like that number that's been in the process of being discovered, basically you pull the trigger and say, I want that. And you put that number in your back pocket. Now you can see how that does compared to February. Okay? If February ends up being higher, well, then February trumped it, and it has no value to you at that point, but it may be a better value or a better number than February as well. Okay? ADM is only giving us the first half of January and the second half, and then at that point, that endorsement has gone away. Okay? Doesn't mean you have to wait until 2:30. This is an old slide. 2:30 of the 15th of January. There's some that maybe it's 2 days before, 3 days before, see that that number is pretty well discovered and it's pretty well set. And at that point, they call me and we fill out the paperwork and it's done. It's in place. The other caveat to ADMs, you're not having to do it on 100% of your acres. So just like if you buy a put, you may be doing it on 1, 2, 3, 4 contracts, might represent 10, 20, 30% of your production. The same is true here. You might say, I'm intending to plant 1,000 acres of corn this year. I'm going to put this on 400 acres. Okay? In the first half of January, you may take that on the first half. Maybe the second half of January, you see an additional number that you'd like. And at that point, you may put it on the other 600, or you may do nothing at all. Okay? But it does allow you to do some things incrementally. Okay? And I have brought up the quarter on this as well. And this is a live quote. Just ran it here when we're on break. Again, Sibley County corn shows us that if we're assuming a 424 price, that's where our average is to date, we would be looking at just under 7 cents, or just under 8 cents rather, as our cost for the revenue. This one is definitely getting a lot more looks specifically to beans than corn. I think it speaks to some of the bearishness that we're all feeling out there as far as beans. I'm going to run you a bean quote. Doesn't matter so much whether our acres are big or little. And when we have on our sheet here, 1018 was our close yesterday, or our average through yesterday's close. Whoop. Okay. This is very, very reasonable if you think that 1018 is a decent number to have in your back pocket. You do it for 12.5 cents, $5.50 an acre. Last year with the NAU endorsement on soybeans, we paid $6, $7. Granted, we got the months of December, January, and March. March did give us a bump. NAU is not near as attractive this year. This is showing some strength as far as interest by the producers. The other thing that ADM allows you to do is if you say, well, I still don't want to put that much money into that endorsement, okay? You can look at reducing that 1018, and you can drop it down by 10 cent price ticks, as they call it. So you could, as well, you can say, well, I'm more interested in just a $10 floor, or I want a $10 price, and you can see what that does to your overall premium per acre and per bushel. So these endorsements, I don't believe are going to go away, just based on the interest that there is out there. And it continues to have a fit. I would say, if you're one of those that's contrary to the survey they took last night, if you've got 70% of your crop sold, okay, you've already got some price protection in place. And your multi-peril policy then is really giving you your overall revenue, but basically yield protection. At that point, this may not have a whole lot of merit, unless you say, well, I'd like to put that ADM thing in on the 30% of my acres or my production that I don't have protection in place on yet. So it can have a fit that way, okay? Any questions? I covered a lot of stuff and I kind of went from all those other things into these endorsements, but anything on the previous material or specific to these endorsements? I know those that have some interest or have questions have certainly come and talk to me and so forth. Any other questions as well? I'm sorry, I'm not Art, so I probably can't answer your calculus questions that you have for him, but yes?
You handle all three of those?
Yes. Yep. So, Dawn has been going around, and she has been hunting a few of you down, catching some signatures from you for your production reports. In most cases, your claims are being processed, or have been, or are going to be here shortly. The adjusters that we have working on all these claims, a couple of them this morning said that they think that they're very likely going to be done here by the end of January, first week of February. So hopefully I'm not going to get myself in trouble for saying that. As far as those signatures, yes, we get all your production. In a normal year, we get it from you. Okay, we sit down with you and we fill it out section by section or unit by unit. When there's a claim, the adjuster is the one who's gotten that already. Okay, so there isn't any reporting you need to do to us. We just like to capture a signature so that people back in the head shed know that we're talking to you and so forth. But it's not actually a requirement. Unless if you had a claim on corn and not on beans, then I do need to get your production for your beans, get your signature and so forth. So just to eliminate any confusion, we just get your signature either way. So as you leave, regardless of which door you came in, we've got some of these wall calendars backed by, I'll say, popular demand. They're laying here, they're rolled up, we've got rubber bands around, but it's a whole year at a glance calendar, okay? I don't know that these are quite collector's items yet, but stick around 30 years, maybe they will be. So please take one of those. There's also some vehicle calendars, if that's of interest to you. So, and all the materials on the table in front of you, those are yours to take. Help yourself, and if you've got questions, that publication, that newspaper thing, there's one piece in there that I know has really resonated with a lot of people. Now you've actually got 10 years of history of what the February prices were if you have this sheet, but that also is laid out here quite well on the inside. But there are some good things in here just to read through that might trigger a thought or question or something that you're not aware of that you should be. So take a few minutes and read through that. With that, I don't have any other points to make. Any questions, Dawn? Yeah. We tried to make sure we knew of who all our insureds were here, and so Dawn has got your production reports. If you haven't, she hasn't talked to you yet during break and so forth, please visit with her, and I can help you with that as well. So with that, thank you so much, and keep us in the loop.